We're back. Can I get a thumbs up if you can all hear and see me? Fantastic. Right, let's get back into it. So we're going to skip a few things because we're running tight on time. So I'm going to skip the next one. You can work through that in your own time. I'm going to just speak to these two, and then we're going to look at the notes for this one, sorry, and then the rest we're just going to move it right along. Okay, I think the rest you can sort of figure it out in your own time. Sorry, which one? This one. So we're starting with the net asset value of the pre-primary school, and then now we're making an adjustment. It says here, less the cost to be incurred as a result of the disposal. Okay. So any thoughts at this point or questions? So I mean, again, you don't need to have all the answers because in line with the discussion we're having earlier, you're not going to be able to, you may not be able to figure out all the issues with all of the points by just like reading it code like this, but without drilling down into the detail. But at this point, I just want to hear from you all. Do you have any concerns? Do you think this is wrong? Or do you have any questions? Is it wrong in some, sorry, is it right in some circumstances, but wrong in others? What are your thoughts on this line item? Do you need more information to conclude, or can you make some preliminary thoughts or ask some questions? Or do you have any concerns?
Isn't that the cost for April 13, fair value less cost to sell? The cost to sell.
So isn't this the fair value less, sorry, the cost to sell part, sorry, the cost to sell part of the fair value less cost to sell? Yeah, and if it is, are you happy where it's appearing, or would you have expected it to appear somewhere else?
I would have expected it to appear somewhere else, not there.
Expect to appear as an adjustment to the fair value when determining the IFRS 5, right? And not here. Okay. Cool. Absolutely. But at this point, we're actually not sure what this cost is, right? So maybe it's worth having a quick read at point number 3. Now, I'm breaking the script, right? Because I know I spent the entire session before the break saying how you must like review everything going down before you go to the detail. But I'm going to break the script for the purposes of our discussion. Okay. And let's go down to the bottom and read the detail so we can just finish off having this discussion. My estimate of the cost to be incurred in disposing the disposal group are set out below. These should be provided for at the date the disposal group is classified as held for sale. Okay, so before we go to this table, what are your thoughts on the statement? But my estimate of cost to be incurred in disposing the disposal group are set out below. These should be provided for at the end, like the date the disposal group is classified as held for sale. What are your thoughts? Any thoughts on this? Does this sentence sit well with you, or is it do you have any questions at this point? These costs should be provided for at the date the disposal group is held for sale.
Actually, I have a question.
Go for it.
So yeah, but I just want to go a little bit back on the positioning of the expense or the amount there. So my question is, actually, will I be right to say the amount to be placed there is correct, but the deducting part of it is not correct? Because isn't it, I think IS 16, isn't it the cost supposed to be capitalized? Because we are, how should I put it, direct attributable cost.
But what are you capitalizing these costs to?
So instead of detecting the cost should be added, I mean, capitalized, so that we can determine the actual net asset value. So instead of it being less, should be adding.
But what are you capitalizing to the PPE?
Yes, because this isn't this a PPE, and again, I think the accounting policy is to the cost module.
Okay. So is this cost that are being, yeah, jump in? I think somebody else wants to jump in. Yeah. The tariff.
Hi, Asan.
Yeah.
Isn't that top calculation a calculation where we need to determine our net asset value based on the book value of our records? So if it is, we are determining the book value, then that amount is not supposed to be there because we're determining the book value. So those costs need to come down to the fair value amount to reduce the fair value amount, because we need to compare our carrying amount with our fair value less cost to sell to determine the measurement of our disposal group.
Agreed with you. So, so yeah, we can't capitalize these costs because remember, we can only capitalize costs to PPE for costs that are directly attributable to bringing the PPE to a conditional location in which it can be used by management, right? And this is not where we are right now. Here we're trying to dispose of this asset. The asset already has been brought into use. And remember, as soon as we start depreciating, when an asset is brought into use, we can only capitalize more costs if it enhances the asset, right? If it sort of increases the amount of economic benefits that we expect to receive from the asset. So we're definitely not in the capitalizing space, and there's no avenue to argue that these costs should be capitalized and therefore added back to the net asset value. Okay, thanks, Lataris. Completely agree with you. Okay, from the list of things, your colleagues agree too. Okay, so back to my question. Are you all comfortable with the statement? The estimate of cost incurred in disposing of the disposal group, these should be provided for at the date the disposal group is classified as held for sale. Thoughts? These should be provided for at the date the disposal group is held for sale.
Hi, Asan. Hi, colleagues.
Hello. Hello, your colleagues say
Am I
hi to
audible
you.
enough?
I promise. Yeah.
Yes,
Sure.
yes. With that point of saying my estimate, from my side, I was thinking that we should be using IFRS 13, like the fair value of revenue. But now when the person is saying my estimate, for me, it's like it's the person's estimate, not the IFRS 13. I don't know if I'm wrong on that one.
Okay, let's unpack it. So you're uncomfortable with my estimate and IFRS 13. Thank you, proposal. Point is, what I just want to clarify, I want to clarify two things, right? So when you apply IFRS 13, right, you do make estimations, right? However, you need to estimate using the criteria in IFRS 13, right? So I get what you're trying to say because you sort of explained it. So I'm going to infer that you mean that it's not like my personal views. It needs to be based on the principles in IFRS 13, which I agree. Okay, but I want to ask a question. Does IFRS 13 deal with costs to sell?
Nope. Actually, those costs doesn't seem to meet this criteria that we are trying to measure at the moment, especially like the restructuring costs. They don't seem to fall part of what I expected when I was calculating this.
What was your expectation?
The cost of restructuring, if I'm not mistaken, they are not supposed to fall part of the like the amount that we're trying to calculate, that like at the moment, the carrying amount.
Okay. Yeah, so should not so the restructuring costs should not form part of the carrying amount. Can somebody tell me why? I've got to agree, but can somebody tell me why? And I think I've got a few comments in the chat as well. As well as chat.
Yeah.
Jump in. Yeah, go.
I think I just wanted to answer two questions there. You've got a question on the statement on three that you've highlighted. I think what I'm not happy with that statement is to say, because they're essentially saying that they're going to create a provision for these costs. So we have already established that we first of all calculate the carrying amount using the principles that we would have used historically. If it was IS 16, we would use IS 16 and apply impairment and the likes, and then compare that with the fair value less cost to sell that we would have established. So, and then we pick the lower amount of the two, and then that will be the carrying amount of the assets held for sale. So the fact that we have said fair value less cost to sell, we have kind of like already incorporated that there are costs that are associated with the disposal, and us recognizing another provision or an additional provision, maybe double counting for those costs. Then to answer the question on restructuring costs, those are not included in the costs to sell because they're not directly attributed to the selling of the assets that we are intending to dispose, but rather it's a cost that we're going to incur for the continuing operations that will remain.
Absolutely. Absolutely. And I love how you unpacked it. Thanks, Nyasa. So issue number one, double counting costs, right? Because if we're going to now take this thing into consideration in the fair value less cost to sell, and now we're also providing for it, right? So the thing that I was like just waiting for somebody to say, so thanks for that, was this word provided for. Does that suggest that we're raising a provision here? And it also explain why, right? Because we're really sure why, because we initially thought they're minusing it here because they're taking into consideration the cost to sell. But it turns out when we read point number 3, no, they're actually raising a provision, right? And it's like, oh, whoa, right? That's too hectic. For first reason, we're going to double count because we need to take into account the cost to sell in the fair value as cost to sell. We're not going to raise another provision for this. Okay. However, even more so, right? When we drill down to the cost, and I'm going to go a bit ahead of myself here, because I wanted to go through step by step, but the point was made, so I'm just going to speak to it. These restructuring costs are not directly attributable costs, but they're not incremental costs that we're incurring because we are disposing of the pre-primary school division, right? It relates to restructuring something, or like restructuring the pre-primary school, or restructuring what remains. Okay, which then brings us to the third to the third point is restructuring provisions. There are 3 issues here. Right? Restructuring provisions have specific criteria in IFRS, IS 37 for recognition as a provision, right? And Yasha really touched on the crux of the issue, right? What relates to our restructuring from a measurement perspective, right? So it's a measurement issue in IS 37, right? Versus what relates to continuing operations. So it's only the costs that relate to restructuring, right? Closing a division, changing the division, or in this case, closing a division, right? That we can capitalize, that we can recognize a provision for, not these ones. So sorry, that we can include in the measurement of our provision. Right? I'm going to try to use the correct terminology here. Right? Recognition is another issue, right? And there's a recognition criteria, like hectic. Right? Let's have a look here. Now, I'm not saying you need to apply all of this, but I just want to show you. Right? There's a whole there's a whole 17. recognition criteria here for restructuring provisions, right? When a valid expectation is created in paragraph 72, you don't need to remember all of this, right? And it wasn't actually specifically triggered, but you should at least be aware that there's a specific recognition criteria for restructuring provisions, which would need to make sure that we meet first, before we can recognize this provision, right? Criteria, and also the measurement provisions, right? Making sure that it relates to the restructuring and not to continuing operations. Okay, so 3 issues. That would have needed to unpack for both this sentence here and the restructuring cost down here. Okay, and for each issue, we don't have time to unpack it to go into detail now, but for each issue, right, there's an issue, why it's an issue, what's the recommendation? Okay, and the recommendation for this can literally be, I would need more information, right? I would need more information, or if you have more information, please send it to me, or feel free to send it to me so we can assess whether or not a provision can be raised for this restructuring cost. But it's not going to form part of this disposal group, right? Because we're not gonna, it's our cost as Lampros, right? So we're gonna provide for it. It's not, so either way, this thing is not gonna form part of the CGU, right? That's a fact. However, when you're trying to figure out, so not CGU, disposal group, when we're trying to figure out our own accounting, I can help you out, right? If I get more information in terms of what these restructuring costs contain, so I can apply the recognition criteria and the measurement criteria. Okay, so yeah, so that's just unpacking this point number 3. Okay, let's do the deferred tax very quickly. A favorite. Add back deferred tax liability 4.5 and current taxation liability 25. Thoughts? And let's just read the whole thing. Point number 4, because we don't have time. The net asset value of the disposal group will be recovered through sale transaction rather than through continuing use. Therefore, the existing deferred tax and current taxation liability should be reversed through the income statement. What are we thinking?
That is incorrect, because deferred tax can be part of the sale because it lies in the hands of Lampros, so you can't transfer it during the sale.
Absolutely. So the deferred tax need not form part. We're not going to say we reverse it, right? What we're going to do is it's not going to form part. Excuse me. It's not going to form part of the CGU. Sorry, I keep saying CGU. Sorry, I just need to. Sorry, I just need to cough quickly. I didn't want to blow anyone's ears out. I keep saying CGU, so apologies. Disposal group. So the deferred tax liability and the current tax is not going to be part of the disposal group. Okay, so we need to take it out. Okay, so comfortable that we're taking it out. Okay, and we're going to measure this sort of carrying value excluding it. However, this is problematic, right? So to Shumani's point, comfortable that we're taking it out because we're not transferring it as part of the transaction, the single transaction. However, we're not going to go and reverse everything, right? We're just going to go remeasure it, right? So now we're going to assume that deferred taxes, or rather the carrying value of the CGU is recovered through sale, because that's exactly what's happening, because it's classified as IFRS 5. So we're going to measure deferred tax, making that assumption. Okay, so that this is also not correct. All right, so we've got 5 minutes here. So I just want to just run through the rest over the next 5 minutes, because we really need to deep dive into the next task. So then the next little section of this, you have the whole note. Okay, I'm not going to go through. So guys, so and ladies, I'm gonna just to close this all off. Okay, I'm going to you need to go back in your own time and analyze everything else. So this, and that. What are your views? And then obviously this as well. What are your views on that? Read all of this and also just ascertain your own views on all of that. Okay. So I'm going to move on to this. I'm not going to speak to this as well, because I would like you to also go ahead and do it in your own time. So this is just the draft note disclosure where they've given you the summary of, or the breakdown rather, of the individual assets and liabilities that are sitting in the one-liner on the statement of financial position. Okay, so you can go ahead and have a look at this. Okay, line by line, are you comfortable? Is this complete? Is anything missing? What are your thoughts? I see deferred tax isn't here, right? Are you comfortable with that? I'm hoping that your answer is yes. But if no, then why are you uncomfortable? So just do that analysis. Okay, but I would like to read this part in closing. So during the third quarter of 31 December 2021 reporting period, the group's board approved the disposal of the group's two pre-primary schools. The pre-primary schools will be sold in a single transaction in their present condition as a going concern. The requirements of IFRS 5 were met on 31 December 2021, and as such, the assets within the disposal group have been separately disclosed as this amount, the statement of financial position, and the liabilities have been disclosed at this amount separately in the statement of financial position. Okay, I'm gonna pause there. Okay, focusing less on this. Okay, I'm gonna leave this in your court to have a look at to make sure to check whether or not you're comfortable. I want to focus on this bit. So during the third quarter of 31 December 2021 reporting period, the group's board approved the disposal of the group's two pre-primary schools. The pre-primary schools will be sold in a single transaction in their present condition as a going concern. Okay, so from a narratives perspective, are you comfortable with what has been said here? Is it factual? Okay, is it complete from a perspective of what IFRS requires? Is anything in this paragraph unreasonable? What are your thoughts on this sentence? Or are you in agreement? It's fine. Let's move on. Thoughts? Thoughts?
Can I try? I'm not sure. The note says IFRS 5 say that we must have the description of the disposal group. So when I was reading it, I was asking myself, is the description complete? Do they have to say that LAMPROS has two primary school, which are primarily face-to-face learning offerings? Yeah, that's why I was not sure if the description is complete or not. Yeah.
Yeah, 100% agreed. Absolutely. I was trying to pick out anyone that has actually did the research of going to the disclosure, because the only way you would have picked up this issue is if you did the research, okay, looked at the disclosure requirements, and when you did it. So, and I love tables. When I did my research, I love tables. Why? Because it forces you to apply. Because if you copy paste on the left hand side, what you're going to have a lot of blanks on the right hand side, which is going to make you uncomfortable. So it's going to force you to fill that box, that square, as much as possible. It's going to force you to apply. It's going to force you to start thinking. So for the left hand side, you had all the disclosure requirements in IFRS 5, which was triggered, right? So if you didn't sort of look at that, then you're in big trouble. And on the right, you'd have tried to apply it to the best that you could, right? So on the right, you'd have had a lovely description of what the pre-primary schools are, and a lovely description about the facts and circumstances that are leading us to sell the pre-primary school. Okay, you've created that expectation. Okay, you're going to come here on the day, you're going to read this, and you, just like Shumani, you're going to be like, I'm not sure whether this is complete. This is making me uneasy. I don't like this. I feel like a few things are missing here. You point it out, you get your indicator from the grid. Okay, so that the process is sort of very important and triggered, or not, let me not use the word triggered. It starts during the research period when you are creating that expectation. If you just copy pasted the requirements of IFRS 5 into your research, I promise you, you would have missed this point completely. Okay. Cool. Then let's read the. Yes.
Yeah, I hear you saying there's a completeness issue, but I'm still not getting what is missing. Honestly speaking, this point threw me off.
Yes.
Because now I'm seeing you going concern. I don't even know now if you're disposing something as a going concern. If I don't know if those two talk to each other, asset held for sale. So this whole thing threw me off, honestly. So,
Okay, so
maybe the first question is what the completeness test, what is incomplete in the statement? And yeah, let's start from there. I'm sure you'll pick up. Thanks.
Cool. What is missing from the statement is coming from the disclosure requirements in IFRS 5. Right? Okay, it's somewhere there. Sorry, I don't want to waste your time. And to find it. Ah, there you go. Cool. So what's missing is this, right? So you would have done the work, your pre-research, and what was triggered was to acquaint yourself with the disclosure requirements in IFRS 5. Okay, as you're doing this, you would have known that as part of additional disclosure in IFRS 5, IFRS 5 requires this following information to be disclosed, right? We need a description of the non-current asset or disposal group. Okay, so what's missing, to Shumani's point, is she doesn't believe that the description is adequate, it's complete, right? Because as a user of these financials, okay, I'm reading during the quarter of 31, the group board approved the disposal of the group's pre-primary schools, and they'll be sold in a single transaction in their present condition as a going concern. But then, like, what is the pre-primary school, right? Yes, it could be somewhere else in the report. Maybe it's an integrated report or something. But fact of the matter is, IFRS 5 needs that description here, right? The pre-primary, so the stuff that was in the slides in your pre-release that describe what the pre-primary school is. It needs to be in here, the description. And then we also need a disclosure about the facts and circumstances that led to the sale. Okay, why are we selling it? Okay, and that's also sitting in your pre-release information, right? That blurb about not fitting with the strategy anymore in this blended environment. Okay, and then the standard also requires disclosure on the expected manner and timing of the disposal. Okay, how are we going to sell it? Okay, so I think manner is there in a single transaction, but how about the timing? Okay, where's the timing? When are we expecting this disposal to be effective? So that is the completeness that's missing, right? This narrative does not meet the requirements of these additional disclosures that need to be provided. Okay, I'm hoping that answers your question. That's what's missing.
Perfect. Thanks.
Cool. What's the time? Right. I would have loved to go through this at the bottom, but I think this is actually a repetition of a discussion we already had about fair value. So I'm going to leave it at that. But again, when you read this, please just critique fair value verbiage that's being used, right? The narrative. Okay. I'm hoping it makes you a bit uneasy, and just articulate why it makes you feel uneasy in sort of your own reflection in your own time. Okay, but now we need to move over to the next task. And I'm just going to pause because I think the support team will need to stop this recording and start another one. So I'm just going to just pause for a minute for that to happen. I don't see anything happening. Okay, if not, then they will just cut it post-production. Okay, let's read the next one. Document D, I think it is. Yes. Task D. Another email from Susan to yourself, the senior financial assistant, right? So when you read through this, we're going to focus on the accounting stuff because we don't have much time. So we can't sort of have a robust discussion on the management, accounting, and finance element. And Rendani will assist with the screencast on that piece, and he will upload that to my universe. Okay, but so for the purposes of this task, of this discussion rather, we'll focus on the accounting. But management, accounting, and finance was a intricate part of this task. Okay, hi again. This is turning out to be a busy day, but I mean, we already know that. As we discussed previously, the board has been considering funding alternatives for Africa expansion and Africa Capital Partners has indicated their appetite to provide funding. Okay, so picking up from that conversation during the pre-release period, at the same time giving us a little bit of context, insight into who our audience is going to be. Okay, the previous email for Susan and the CEO as well. So keeping our language like nice and simple, no need for hectic jargon, but keeping the structure. But now even more so, right? Our audience could potentially be the board of Lampros. So very important then to keep that language easy going. If that turns out to be our audience, right? So we're almost like being taken in a certain direction with this email. Okay, no sort of concrete direction yet. ACP, which is Africa Capital Partners, has provided a high-level indicative term sheet in respect of our proposed Africa expansion plans, which is attached. Okay, so again, like I mentioned earlier on, expect further information for every single task, and expect the grid is always going to ensure that it assesses whether or not you demonstrated on the day thinking. You're not going to cheat the system, that I can promise you. Please review and provide me with your initial inputs on both proposed options so that I can prepare a document for the board. Okay, so at this point, you would be forgiven because then the trigger in the previous period was speaking to the accounting, and now we're coming through on the day and we're being asked to please review the funding proposals, the term sheets, and provide initial inputs on both proposed options so that I can prepare a document for the board. Okay, tricky, right? Because I'm just like, what do you mean by initial inputs? I'm not too sure, not a much of guidance. Thank goodness the guidance comes later, but I mean at this point this instruction isn't quite clear. Okay, we're just supposed to provide inputs on the options. However, what is important is this sentence. I want to make it yellow, but the color don't mean anything. Just trying to highlight sentences so I can prepare the document for the board. Okay, what has been highlighted now is our audience. So our responses need to make sure that our responses are nice and easy to understand. Okay, not too jargony. Okay, and paragraph references not needed. Definitely not needed. In your response, I would like you to focus on the following. Okay, fantastic. We've got a little bit more guidance here because that just giving your initial input on the proposed options is quite a broad. I mean, a task can come at you like that, but it's still quite broad. Okay. A critical discussion on each funding option to assist the board in choosing how to fund our expansion. Okay, this will be covered in the screencast. But now remember, every single component is crucial that you cover, right? So I would even split my thing into headings if you need to. Okay. An explanation with reasons whether or not Lampros should consolidate the newly formed company, NewCo, in its group financial statements in the event that it chooses option 2, direct equity investment. Okay, now I'm going to pause here and open it up to the floor again. What have we been asked to consider in bullet point number 2? What have we been asked to do?
Hi, Asa.
Hello.
I think we've been asked to determine whether Lampros Group has control over NewCo or not, to determine whether we need to consolidate the company or not.
Okay. Any other people anyone else want to contribute? Agreed with that? There was a hand. I'm not sure whether you want to add to it. Is that it, everyone? That's all you're gathering from this? No other insights, no other words that are jumping out at you? Nothing? Yeah.
I agree with Lotharis about the control part. And also another thing is the new form company, the separate vehicle, is it supposed to be included or not, which is AFRIS 11.
Sorry, so if the separate vehicle is supposed to be?
Included the AFRIS 11, the separate vehicle, the new core company.
Needs to be included. Included in what?
Consolidated.
Oh, consolidated. Okay, cool. But that's IFRS 10, because
Yes.
remember 11 is joint control.
Yes, that's what I'm saying that I thought of these two parts. They IFRS 10 and also IFRS 11. They were like, yeah, on my trigger list when I was doing those two standards. IFRS 10 and IFRS 11. Yeah.
Okay. Let's unpack this. Very important. So you said trigger list, so I'm thinking PRI. So during the previous
Yes.
period, you considered these two standards. Okay, cool.
Yes.
Now, with the context that you have on the IOD, did your response have these two standards as well?
Yes, it does, because in the next page, the one that we're gonna go to, when we're drilling down into it for the equity investment, they were talking about how this vehicle is gonna be, what is it called? It's gonna be run, I think, yeah, the word, yeah. And then also talking about the board of directors, how if there are 5, the other company is gonna be able to elect 2 or 3. So that was IFRS 10 if they've got control. And then also the new core, what is it called? The company is a separate vehicle. Is it IFRS 11, a joint venture, or is it IS 28? So those were my thought process when I was doing this. Yeah.
Okay. Cool. Thanks for sharing your thought process. Can I hear from somebody else what their views on that is, if there are any views? Agreed. This task required us to discuss IFRS 10 and IFRS 11, because I agreed the information was sufficient in such that we could apply IFRS 11. Okay. But I want to know whether or not the task asked us to do that from a planning perspective. Thoughts? Hello, people. Thoughts?
Sorry, I think the focus was now on whether or not we should consolidate. So we'll need to explain at the end of the day, are we consolidating NewCo or not? And if yes, why? If no, why?
So to confirm, then you're saying IFRS 11 is a bit too far.
Given that they've been specific to say if we take this option 2 for equity investment, the point suggested that we were going to focus on IFRS 10 and really discuss on whether or not we should consolidate or not.
Thanks, Nyasha. I've got a hand. There's a hand there. I'm not sure who this is. George? Come through, George. Don't be shy.
Oh.
Yeah.
Thanks. Oh, I just wanted to add, especially what the previous speaker was touching on, to say if now we're moving away from IFRS 11, it takes us to IFRS 10, and then if IFRS 10 is not applicable, it will take us to IFRS 9 to say what type of investment is it here. Thanks.
Cool, thanks, George.
I think maybe if we have all the applicable investment standards in place, because they're saying that we explain with reasons. So if we should not consolidate, why should we not consolidate? So if we do not have any information on IFRS 11 or IFRS 9, we won't be able to provide those reasons. So I think just for coverage, we should have had all the standards that are relevant to assess. If there's no control, you say that we should also include recommendations to say, okay, we cannot consolidate because we do not have control. However, we can account for it in accordance to IFRS 9 or IFRS 11 standard.
Okay. Any other thoughts before I unpack all of everyone's points?
Asen, while reading it, I think the key word that stands out for me is that consolidates, besides the explanation and reason. So once we're consolidating, it's either it's groups or it's not.
Thanks, Refuwe. Cool. I think we've got a nice broad amount of thoughts here. Okay, it was very interesting to listen to, I must say. Okay, so what is the question that has been asked here? I mean, great way to end off the freeway was that the question is, we need to include an explanation with the reasons whether or not Lampros should consolidate NewCo, right? And then the question then becomes, how do we answer that question? So the question does not say, or it doesn't say, how should Lampros Group account for NewCo, right? That is a very different question to, should Lampros Group consolidate or not? Okay, and there's only one way to answer, to Refua's point, there's only one way to answer that question, right? And that one way is by applying IFRS 10. Right? Because IFRS 10 tells us when one entity has control over another entity. Okay, so it's IFRS 10 we need to be looking at, and it's IFRS 10 that we're going to be applying. Going through all of these other other standards is wasting your time. And there isn't any need to make recommendations here because you haven't been asked like whether or not a specific treatment is correct, or you haven't been asked to recommend the correct accounting treatment. You've just been asked a question, should we consolidate or not? Your job is just to answer that question. And how will you answer that question? By applying IFRS 10. Okay, is that clear? Or do I have any different views?
Yes.
Okay, fantastic. Now, can I throw another span in the work? Do I need to discuss IFRS 3? Business combination. IFRS 3?
No. I would say no.
because-
No.
Go. There's a lot of thumbs up in the chat. And what's going on there? Is people agreeing to the no, or is that a yes? But yeah, jump in. Sorry, don't you guys don't need to all jump in. I'm not sure who was speaking, but yeah, please come back. Hello. There were so many voices.
It's a no. It's a no. I think it's a no because FS 3 will apply once we've answered the question. It's more like the next step. They never asked us of the next step. If you get what I'm saying. The
No, completely.
question ends on what you call FS 10, whatever 10 though. Not necessarily to say if it should be consolidated, then what next? So I think that's another step that is not asked.
Yeah, completely agree. Okay, so this Refuwa, you want to say something? I see you're unmuted.
I
Wanna
wanted
jump in?
to ask, like I was going to say no, we don't need to discuss IFRS 3. However, maybe to be a HC, we can go there. Would that be
nah.
too much?
Yeah, too much. Not in scope.
Okay, thanks.
Let's go. Right, because consolidation and business combination accounting, two different things. And it sounds like everyone in this session, I'm hoping that's what all the thumbs up are all about, is aligned in that consolidating procedures is very different to accounting for a business combination. And in this case, we don't need to discuss accounting for a business combination because that's not in scope of the task. We've just been asked, is there control here or not? Does one entity control another entity? No one cares whether or not the other entity, the investee entity, is a business or not, and therefore scoped into IFRS 3 or not. Okay, fantastic. Now, I just want to touch on, so somebody actually said it, I'm going to delete recommendations, and an explanation with reasons. Okay, and again, I mean, they keep putting in this with a reason, and I suspect they're going to continue doing it just to make it very clear. But in your mind, just always sort of think reasons, right? It's very important to sort of articulate why you're thinking about it. Unless a task asks you for a list. Okay, if it just says list that, right? Let's go ahead and list it. But usually, even if they just said an explanation, whether or not, without this with reasons in thinking here, I would still have gone the extra, not gone the extra mile, but I would still provide reasons in my explanation. Okay. In the event it chooses option 2, right? So we're only considering option number 2, which at this point we don't know what option 2 is in terms of the T's and C's. right? So we're going to see the specific terms and conditions. Now, another thing is, I want to make explicitly clear at this point is, don't come out of this exam stressing out whether or not Lampros controls a NUCO or not, right? You're always going to have that guy or lady that's going to come out of the exam and is going to want to ask everyone, what did you conclude? What did you conclude? And then stress out everyone else, okay? Don't worry, okay? Because the only thing that you need to worry about is, and I see a lot of people are in agreement because it happens all the time, right? I used to like walk straight out. The question has asked you, determine whether one Lampros group controls NUCO, right? Whether or not, right? What do you need to do? Apply IFRS 10 and conclude based on your argument, right? One person can conclude one way, the other person can conclude the other way, and both will come out with a competent response. Okay, there's no pressure here to get the right answer. The pressure is to identify as many issues as possible, which you're going to try and do with the time that we have left. Deal with those issues, articulate how that impacts your control assessment as robustly as possible, right? Get coverage. And then your conclusion must be in line with your argument. You must be able to look at your argument, look at the specific facts and circumstances and the application of IFRS thereof, and be able to make an appropriate conclusion based on your analysis. That's what we're looking for from your response. Okay, so don't stress about the people that go one way or the other, right? I'm going to use 2 minutes just to give an example that I use very often. ITC exam, candidate wrote it. It was a question, intangible assets. It was a footballing contract, right? They played with Ronaldo and Messi in a scenario. I think it was Manchester United, and then I think United purchased the player that was supposedly Ronaldo, and then they asked, is that contract an intangible asset? Right, that was a question. Candidate came to me or sent me a WhatsApp after the exam, stressed that because a lot of people are saying it's inventory, right? And this candidate concluded intangible asset in her sort of analysis, but now everyone says inventory, so the candidate was stressed. So I asked the exact same question that I've done now, like, what did you do? Because she sent me a picture of the question. It's like, no, I applied the definition of an intangible asset and I conclude that it is one. I was like, yeah, that's all you needed to do. And if you applied the, if you unpack that definition, the pieces of it, non-monetary, asset, without physical substance, and an asset, unpack that, resource, control, inflow of benefits, and applied all of those pieces, and you concluded, fine, it is an intangible asset. Or even if you conclude, no, it's not, right? You're absolutely fine. These other people that went and discussed the definition of inventory, right? Those people should be the ones that are concerned, worried, because they did not do what they were asked to do. Okay, so just bear that in mind in terms of analyzing the question and doing exactly what you have been asked to do. Okay, next one. And an explanation of whether Lampros should classify the put option granted to ACP as a contingent liability or a financial liability. Broadly, note the implications in the statement of financial position. What have you been asked to do here? An explanation of whether Lampros should classify the put option granted as a contingent liability or a financial liability. Broadly, note the implications in the statement of financial position. What have you been asked to do?
To
I hope you guys are
apply
not afraid now. Yeah, yeah, jump in.
the definition of a contingent liability and financial liability and see which one it is.
So I'm going to tap out, sorry, explanation of the definition of
The contingent liability or financial liability, and whichever definition it meets is that one.
absolutely. Is that all?
Hi, Asen. I think
Mhm.
we were supposed to look at the put option and then assess it based on the definition of the contingent liability, whether it meets the definition, and then also assess it on the financial liability. And then after that assessment, also to indicate what the implications of that put option will be in the statement of financial position.
Three components to this sub-component. Now, I don't believe, and then obviously there's no rule to this, so so it's just an out of principle statement, right? But again, APC is so judgmental in terms of how they assess and how they do the grids. It's very difficult to establish steadfast rules like we can with ITC. But if I was setting this grid, I would make it mandatory to cover each one of these three components, right? That's in line with how SAICA typically assesses, but typically you wouldn't be penalized super harshly for missing a subcomponent in here, but you'd be penalized from a coverage perspective, and you probably wouldn't get enough coverage in this last point to almost get a competent outcome in any event. So what's the message I'm trying to send? The message is, in this particular task, even this component of the task has sub-components, which are also important from a coverage perspective. So there's three things that I need to discuss here. In relation to the put option, I need to discuss the definition of a contingent liability, then a definition of a financial liability, and then discuss the implication of whatever conclusion I make, whether it's one or the other, or whether it's something else, on the statement of financial position. Okay, so these are the three things that I need to discuss. And during the pre-release period, so I'm going to speed up a little bit because I'm looking at the time and I'm horrified. I'm hoping that you did the work to sort of think through, because I mean, we spoke about it in the screencast. So think through, because you were given a very high level, the T's and C's of the, or rather you were just taught about the put. Right, but there was information missing that we ran over in that video for the pre-release period. So I'm hoping that you took the time to think about whether or not that put option will be a derivative or not. And also I challenge you to think specifically about the exercise price. And maybe let me open up the floor very quickly for that discussion, if anyone did that reflection. Okay, why was the exercise, so you weren't given the exercise price of this put option in the pre-release information? But why is the exercise price quite important in ascertaining whether or not what this put option is, and specifically whether or not the put option is a derivative instrument? Does anyone have any thoughts offhand very quickly on that? If not, we'll continue reading and then we'll pick up the conversation again. I'm just going to give you like 2 seconds for anyone to put their hand up to say anything. No. Okay, so we'll pick up the conversation again later. Okay, so the term sheet is silent about the number of directors on the NewCo board. It is our understanding that NewCo will have 5 directors. I thought I'd mention this in case it's relevant. It's a relevant consideration, right? That kind of means that it is definitely a relevant consideration. But why is it relevant? Can anyone tell me why such a point would be relevant in our considerations?
I think in this case, after reading the rest of the information, it assists in the determination of the control portion.
Absolutely. Relevant and assist in the control assessment. Right? Because typically speaking, directors are decision making, typically. Okay. And in a default scenario, shareholders delegate to directors, directors delegate to management. Okay. So it is typically the shareholder that can control, that can direct the appointment that controls the investee entity, typically. But now we need to see the specific T's and C's in the scenario just to see what the specific facts and circumstances are here. Okay, but yeah, I thought I'd mention this in case it's a relevant consideration. That's the dead giveaway, right? Examiners will very seldom give you stuff that that is not relevant. But they can do it as well, right? So it's not like you have to use information all the time. You don't have to go into the technical detail of the accounting implications. A high-level explanation should suffice. You can also ignore tax for now. Okay, again, giving us a little bit of context in terms of our audience, right? Because going to the board sounds like, so let's not get too technical on it. Let's keep it simple. Now, this can also assist you in time management as well, right? Because Susan does not want a detailed technical memo, right? And those that are coming through from the Indonama program, one of our case studies, you are familiar with what a technical memo looks like. It's such a complex document that unpacks the background, articulates the applies every single accounting principle that can be applied, and then it concludes. Right, so it's quite a lengthy document. But this task is saying this is simple, high-level explanation should suffice, right? So don't overcook this. Don't go on and on and on and on and on. Just keep it simple, because the examiner is telling you that this is not a long task. Okay, so keep that in the back of your mind when you're allocating your time to the different tasks. Okay, would it be okay if I get responses soon? Of course, Susan, we've got your back. So let me just skip all the way down to option 2. And what I want to do is I want to get into the meat of this piece here, because we're running out of time. Because I want to have a quick discussion about IFRS 10 and sort of how you can get generate indicators, right? So let's have a quick read. Option 2, direct equity investment. As an alternative to the provision of the loan funding indicated above, ACP has considered and approved a direct equity investment to be utilized towards the acquisition and establishment of various schools throughout Africa. Our equity investment proposal has been premised on the following assumptions. Okay, detail amount. So the total cost of the investment opportunity indicatively is $20 million. ACP Capital Fund, ACP will invest 10 million to the initiative, and the shortfall will be funded by Lampros. The 10 million equity investor, 50-50, that's the funding is split in half. The 10 million direct equity investment would be advanced subject to the following indicative terms. Lampros's acquisition and establishment of various school operations throughout Africa are to be held in this new company. Okay, so we're being told what NewCo will hold. Lampros's acquisition and establishment of various schools throughout Africa are going to be held in the newly formed company NewCo. Is this information relevant to a control assessment in any way? Because now I've got laser focus now. I'm reading this, knowing that I'm performing a control assessment because that's what I've been asked to do. So now, is this first sentence important for anything in a control assessment? You can answer that question, or somebody can assist us all in just reminding us what a control assessment entails. Pick your pick and answer any question, one of the 2 questions, and anyone can. Hello, people, we've got 9 more minutes. 10 more minutes. Let's push. Let's get as much of the 10 minutes as possible. Control assessment, or is statement 1 important to the control assessment? Lotaris, I think you unmuted. You want to jump?
Did I unmute?
Yeah.
Yeah, I think it was by mistake.
Okay. People in the chat, come on, unmute. Zizipo, jump in. Talk to us. The problem with the chat is the points are the points are incomplete. Sure, guys. Nobody knows what the elements of power are.
It's power over the investee.
Means control. Sorry. Yeah. So 1, power over the investee.
Exposure or rights to the variable returns.
Exposure to the variable returns.
The ability to use the power to affect the return.
Thank you. Now, thanks so much. So now when you power over the investing, and now the thing is, you need to deeper into the first element, right? So now we're talking about identifying issues to generate indicators. Okay, with IFRS 10. Okay, this is very important to remember because there's a lot to talk about in IFRS 10, and a lot of candidates don't talk about what they need to talk about. So power over the investee means the ability to direct the relevant activities. Right? This means two things. One, you need to know how to identify relevant activities. Two, you need to know how to identify who directs those relevant activities. IFRS 10 offers a four-step question, 4 questions you can ask or ascertain the answers to unpack step number 1 robustly. When that step number 1 is where it's going to have the most things to talk about. Okay. First thing to consider is the purpose and design of this entity. Okay. Now, technically speaking, this is for structured entities, right? But if you want to be a purist, but it's an awesome question to ask yourself when you're trying to identify relevant activities, even for the more simpler companies, right? So even if you just start with, what is the purpose of this company? What is it designed to do? Okay. Sure. I will lose my train of thought. Okay, cool. And then you identify which activities significantly affect the returns. Because once you know what this company's purpose is or what it was designed to do, you can very easily identify what activities will then affect the returns of this entity. Okay. Then you go in and dive into how decisions are made about the relevant activities. This is factual. Okay. You need to assess all of the rights and determine how decisions are made. It's a fact. Decisions are made by shareholders. Decisions are made by a majority shareholder. Decisions are made by the preference shareholder that owns more than 50%. Decisions are made by the entity, whoever's contracted under the management contract. It's a fact. This is how decisions are made. Okay. And then lastly, you check who then has the ability to make those decisions. Right? Lampros is the preference shareholder. Lampros is the majority shareholder, therefore they can make decisions. Lampros is not the majority, that they can't make decisions, right? So it's these 4 questions that you need to address to robustly unpack step number 1. Okay, now under C here, and I'm going to talk about this in the context of not just IFRS 10, but just in general, even like IFRS 16, IFRS 15, I mean, you name it, any standard. Okay, you're gonna have to speak out, you're gonna have to find all the substantive rights, right? The right that give another party the current ability to direct a decision or to make a decision. However, you might encounter some protective rights, right, which you're all familiar with the fact that you have to ignore these. Okay, but what is a common mistake that always gets made? Now, this is the example that I'm going to use to also highlight that the point that I made, that it is more important to unpack and address all issues than come to the correct conclusion, right? So long as you could conclude correctly, right, in line with your argument. It's because I'd rather focus on trying to identify all the issues, right? So if there are protective rights, identify those protective rights and then say, I am ignoring this right because it is protective. Okay, so your response is then robust and so it has coverage. Okay, and then exposure to variable returns. Common mistake there is just identifying unvariable returns, right? It is possible to have multiple, right? So identify all of them. So if it's a loan, if it's shares, whatever the case would be, identify all of them, right? And principal versus agent, this typically is very complex, very specialized. So if an examiner wants you to go there, they should trigger you to go there. Okay, so coming back to my statement, and I think our days here are numbered, so we won't be able to discuss a lot of this. Is this first point, Lampros's acquisition and establishment of various school operations throughout Africa are to be held in a newly formed entity called NUCO, important for any of these steps that I've mentioned here in terms of performing an IFRS 10 assessment? Are any of, is the fact that we're going to be holding all the schools, Africa schools in NUCO, important? So we're going to acquire or establish schools, and we're going to put all those schools in NUCO. Is that important for any one of these steps in this control definition?
Not necessarily for the step, but just to note that Lampros and thingy are gonna help their youth into NUCO.
Okay, so just to note that they're gonna hold everything into NUCO. Okay, so let's park that one. I think someone else also wanted to jump in. Please do.
I wanted to say, would it not maybe go under point 1A? It's like they're telling us the purpose of like the company.
Absolutely. Thanks, Nokukanya, and somebody in the chat as well. Can't see who exactly. This can help us identify the purpose and design of this entity. Okay, this purpose and it's designed to hold acquisitions or established schools in African countries. And then from there, we can then ask ourselves a question. Okay, if that is the purpose of NUCO, what activities then significantly affect the returns of shareholders? Okay, can I get a few? If that's the purpose and design of NUCO, what activities do you believe would significantly affect the returns of any shareholders of NUCO?
I think deciding which African countries to invest in.
Absolutely, right? And I'm not going to go any further than that because of time, right? But that's a fantastic point, right? Which African countries? Who gets to decide that? That's a relevant decision. So do you see how, and it's a sort of a fantastic example of a relevant activity, how if we understand what the purpose of this company is first, then identifying the relevant activities becomes much easier because you almost know the reason of this company's existence. Therefore, it's very easy to unpack what the relevant activities are. Okay, so I'm going to leave that there and I'm going to let you think for other relevant activities as well. So I want to discuss this point quickly. And I think we probably won't have a chance to discuss anything else. Maybe just the put option. Maybe I'm just going to go as far as
the relevant activities.
discussing the put option. Sorry, what is that? Could have been a delayed comment. Right. So this paragraph just speaks to how Lampros and ACP will own 50% of the ordinary shares. Okay. So in this case, you can be like, find 50-50. It sounds like nobody has unilateral control, but remember, sorry, unilateral power, but the standard IFRS 10 is very clear. Okay. Sometimes shareholding will lead you in the right direction, but sometimes decision making isn't necessarily based on shareholding. Okay. But again, I would rather be the candidate that identifies the issue and unpacks it, because you need to speak about that. Because yes, fine, the shareholding in this case is irrelevant to who controls, but you need to articulate that. Like, yes, typically shareholding will lead us in the right direction, but not in this case. Other facts and circumstances need to be considered to ascertain who controls NUCO. Okay, like a protective right again, unpacking as many issues as possible. Okay. Let's look at this. ACP, sorry, fine, that's irrelevant. Let's look at 4. ACP is to be given the right to appoint one non-executive director on the board of Lampros. In addition, ACP is to be given the right to appoint 2 directors, including the chairman, on the board of NUCO. All such appointments will be effective for the duration of ACP's shareholding in UCO. So let me read that again, sorry. ACP is to be given the right to appoint one non-executive director on the board. So I'm right here, ACP rights, one non-exec. In addition, ACP is to be given the right to appoint two directors, excluding the chairman. Two directors, excluding chairperson. On the board of NUCO, established for the
Directors.
asset expansion. Sorry. All such appointments will be effective for the duration of, sorry, all such appointments will be effective for the duration of the arrangement. What are we thinking?
I think those are protective rights, so that those directors will protect the investment of ACP. That's my thought.
Okay. So let's go back to have any other thoughts before I unpack that one?
I've got a question. Because we've got 5 directors, right? But then I had an issue that I didn't understand, because now if ACP is gonna now appoint 3, is it 3 or is it 2? Because there's one that is non-executive and there's 2 that are executive. Which one matters? Because if there are 5 and you're appointing 3, you can say maybe you've got more, you're gonna have more people in the board who's gonna be voting from your side. And then if it's 2, so I had that question of saying, how do they differ? Do you now go back to King 4 to determine the non-executive and the executive in the board, how they work, and everything? That's the question that I had on this part.
Can I just ask before you answer, Asin, on that directors, so it says 1 would be on the board of Lampros, the group, and then 2 will be on NUCO.
Sorry. Thank you.
So I don't know if that's still directing us on who's going to have the control, if now they have 1 person group level, then 2 people in this joint arrangement, or
Sorry,
Yeah.
you're absolutely correct. I completely missed that nuance. Just to check,
I'm sorted on that one. I didn't see the Lampros part.
Just to check your money, you sorted out the
Yes,
question.
I didn't see the Lampros part. So
Okay.
so
Okay,
meaning on
cool.
the 5-1, they've got 2, which means that it doesn't necessarily say they've got control.
Yes. Sorry, I completely missed in my summary here. So I hope I didn't miss you. I hope I didn't lead you astray. So Lampros Group and the other one is NUCO. Okay, so now that we're all clear. So I'm going to delete this one then. Protective rights. So somebody mentioned, I can't remember who that are, these protective rights. What are our thoughts on that one?
I wouldn't say it's necessarily protective rights. I will just say they don't have control. The protective right one, I would just say they don't have control based on the fact, like it's gonna go back to April 10 when they say that, what is it called? Voting in, no, not that one. But the point is that they've got 2, the other one's got 3, but the fact that they can appoint 2, it doesn't give them control, not necessarily the protective right.
So ACP does not have control.
Yes.
Okay, not necessarily
Protective right,
protective, so in the interest of time, I'm also just going to jump in here. So protective rights typically relate to, like I agree, protecting your investment, but it means more protecting your investment to substantial changes to the company that will really put your investment in jeopardy. So for instance, like a share buyback, restricting share buybacks or restricting share issuances, restricting amending the rights to your shares or the rights to your in the arrangement. Those are more protective rights because they're protecting you from a fundamental change or a big change in your investment. Okay. Yes, having directors as ACP will allow them to have oversight, right? right? They may not be able to, they may not be able to make decisions by themselves, but it does give them a level of protection, but not in a manner that is a protective right to be ignored, right? This is more a substantive right. Okay, so I just want to ask a question very quickly. If ACP can appoint 2 directors in NUCO, how many directors can Lampros appoint?
3.
And where are you reading that?
I'm not reading it anywhere, but they said that we have 5 directors. Oh, the company is going to have 5 directors, and NUCO can only appoint 2. So if they have 50-50 shares, then the rest would be NUCO. I mean Lampros.
Okay. So I guess on the basis that the only other shareholder is Lampros, then surely they need to sort of appoint the rest of the 3 directors. But is that in fact, or are we making an assumption?
I wanted to ask him that assumption now.
Yeah.
Yes, I wanted to ask if isn't that an assumption saying that they're gonna appoint 3 directors?
I can agree with that. Feels like an assumption, because ultimately it can go the other way, right? Maybe the rest of the 3 are appointed. Maybe the rest are appointed normally, right? And by normally I mean by majority shareholder vote, right? Maybe it's a case of ACP can appoint 2, but the other 3 need to be agreed unanimously between Lampros and ACP. That could also be the way that this goes, right? And that's also a valid assumption to make. Okay, so the point I'm trying to make is in scenarios like these where you find yourself needing to make an assumption, like go ahead and make it, right? So I don't believe you'd be wrong with either way that you went in terms of your assumption that you made, but you also need to be able to articulate that, right? And say your fact pattern wasn't necessarily clear, because remember now we're transitioning from ITC. ITC level would never do this, right? Because now we have to accept 2 solutions, right? And when marking ITC, so this would never happen, or at least we'll try our best to not make this happen. APC level, this is open season, right? But you need to sort of be able to identify, like, okay, I'm making an assumption here, or the information that I have is insufficient for me to be resolute in my conclusion. Therefore, I'm assuming this, okay, because of whatever factors that you based your assumption on. However, if it's going the other way, then this could potentially be the impact, right? So having that ability to identify when you're making assumptions and address the assumptions openly and say, this is my conclusion based on if I assume because of this facts and circumstances, I'm going this direction. But if it was the other way, then maybe the conclusion would look a little bit different. Okay, be comfortable to play in those spaces, especially at an APC level. Okay, what's the time? 10 minutes over. So cool. Last thing that I want to talk about, but I'll talk about it in the form of an example. Okay, because I want you all to go back and think about this put option in your own time. But I want to have a discussion here into the definition of a derivative using an example. So let's say I issue a contract to you. So Austin issues, right? It gives you the right to buy petrol, right? And I mean, the petrol price keeps going up, or maybe you have a different view. Okay, and let's say it gives you the rights to buy petrol at a price of what's the petrol price now? 20 rands. I said 22 rands. Whatever the price of petrol is now, I think it's about 22 rands. Okay. Would you end and I say give you the right to buy petrol at the price of 22 rands in 6 months? And let's say you need the petrol, right? You need to go to work and stuff. So you need it. Would you enter into this contract with me? Why or why not? It's not a trick question. Just give me your views. Doesn't matter. You can't get this one wrong. Would you enter into this contract and give me a reason why? You would or you wouldn't?
So can I try? So is it like one like 22 rand, or is it like 22 rand
Per liter,
throughout?
per liter. Sorry, what is your clarifying question? Is it what?
So I'm asking, like, is it like maybe let's say 40 liters, right, throughout the 6 months, or is it just like one
Full
fill
tank,
up, if I
right?
could put
You
it like that?
buy, yeah, one full
Full
tank
tank.
of petrol, the price of whatever, in 6 months. So just one, yes. Or yeah, in 6 months. Would you
So
enter
for
into the
me,
Mhm.
I think like looking at the petrol prices at the moment and how they keep like fluctuating and moving around, it would be like a bit difficult to say I'm going to take the 22 rand, because maybe it might give me like less liters in my car. And then maybe to think that maybe in the future, obviously it would be speculation, the petrol price might go down. So then it might be beneficial for me to maybe hold on to this contract, maybe in a month's time, then buy the petrol.
Okay, so judging from what I'm hearing, you're very risk averse, but you raised all the valid points, right? In that your struggle in terms of whether or not to enter into this contract is what will happen to the petrol price, because you're like, it could go down, so I'll lose out, or it could go up, but then so I'll make some sort of gain. But then I don't know what's going to happen because it's so volatile, so I'm not going to enter into this contract. Okay, what you've explained is how this contract has value, right? So it has value to you depending on what the petrol price is doing, right? So now the petrol price becomes a commodity price. You can call it a commodity price, and that becomes an underlying. So the value of this contract fluctuates in response to changes in the value of an underlying. Okay? You paid nothing to enter into this contract and it's settled in the future. Therefore, this contract would meet the definition of a derivative instrument, right? Ignoring, for all the accounting purists out there, the own use exemption, right? Let's ignore all that stuff for now. Okay. How about if I say that I issue a very similar contract? However, the price is price of whatever the price of petrol is at the time per liter in 6 months. So we're entering into this contract, and gives you the right to buy a full tank of petrol in 6 months, and you're going to buy this full tank of petrol at whatever price petrol is at the time you exercise this contract. Would you enter into this contract? Why not?
Yes.
Anyone can jump. Yeah, jump in.
So yeah, yes, I think because then, like, to go back to my first point, then it would just be a matter of like, now I can be able to say I'm assessing between what the price is today and at whichever day, if I feel like it's favorable to me on that day in a future period, then I'll buy it.
Okay, but I mean, it's going to be the same price, eh? So whether you get the petrol from me or you get the petrol from Shell, you're going to pay the same price. So is there really a benefit to you in this contract?
There is, because well, I don't know, because I'm thinking now in this way, okay, now in this way, we're not really like maybe hedging anything, because with the first one, at least you have 22. So if you have 22, if you have less, then it's a gain. If you have more, I mean, if you have less, it's fine. If you have more, like it's a gain to you to buy, okay, yeah, to buy 22 rand. But then in this case, it's just a matter of, it's like out there. Doesn't really matter if the price goes up or goes down. There isn't nothing, like there isn't yeah, a ceiling or anything that you can look at to say I'm measuring up to here.
Absolutely. And I see someone also got it in the chat. In this contract, doesn't really matter. Price goes up, price goes down. You're going to buy the picture of whatever the price is at that date. There's no value in this contract for you. Therefore, derivative definition not met. Okay, so with this context, please have a read of point number 5 and unpack. Is this contract a contingent liability? Is it a financial liability? Okay, and just take it a step further. If not, what is it? Okay. Thanks, everyone. I'm not sure whether there's any further questions for me. I've taken enough of your time extra over the actual deadline of the session this evening. I am gonna open up the floor to any questions in closing. Right, fantastic.
I'm sorry, Asen.
Yeah.
I just have a question. So in terms of making an assumption, how far should we go? Because I think twice, the first one was on the approval date and the IFRS 5 criteria be met. And again, I think we made an assumption in here, or we spoke about assumption. Like in terms of making assumption, how far should we go? Like making an assumption.
Yeah. So I mean, in the first one, we didn't really make an assumption. I think it was quite clear that the IFRS 5 criteria was met at a specific point in time, and we were given that date. So I wouldn't say that we made an assumption, but I think in this task, I think it is fair that we needed to make a fairly big assumption in terms of what we're concluding, and in terms of how far you should go. I think you phrased it in a very weird way in saying how far we should go. I think what you should do is you should base your assumption on whatever facts and circumstances seem likely. Okay, let me put it that way. So in this scenario, you don't have to go on a witch hunt trying to, I don't know, make assumptions. You can just very quickly say, it's noted quite clearly that ACP can appoint 2 of the directors. Okay, silent about how the other 3 directors are appointed, and using the reason that were given in our discussions, since Lampros owns the other 50% of the shares, it follows therefore, or it would be likely therefore that they can appoint the other 3. Therefore, on that basis, blah 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 blah. However, if it turns out that the other 3 directors are actually appointed by a majority vote, as per the basic or the basic requirements in the Companies Act, this is how the conclusion would change, right? So you see that I'm not spending too much time doing this, right? I'm not super stressed out about it, but I'm just clearly articulating my thought process. I'm saying the information you're giving me isn't complete. It isn't sufficient for me to be robust in my conclusion. I'm going to make this assumption based on this factor, and this is the conclusion, or this is how it's going to go. However, this is how it could potentially be impacted, or this is a risk that we run, or I run, if the facts actually turn out to be a little different. Okay, so don't overkill it, but just note it and unpack it and deal with it, right? Let the examiner understand your thought process, what you're thinking. So I think there's because you're trying to be, and this is just now an assumption on my side, maybe because a lot of candidates are trying to be perfect and are afraid to say things like, oh, IFRS doesn't define that really, right? Like we forgot to discuss sort of discontinued operation thing, but you can think about it because the question is quite clear in the pre-release screencast. Because let's be comfortable with saying, listen, major isn't actually defined, significant isn't defined, substantial isn't defined. Right, so I'm gonna base my assumptions based on this. Don't be worried. Don't be too concerned about saying, I think the information you're giving me is incomplete because I was expecting this, but you didn't give it to me. So, so I can't really make a conclusion here because it's because I need this information to make this conclusion. That's all the part of responding to accounting tasks on an APC level. You're gonna have to get comfortable with. Because it's not always going to be a perfect set of information as you have been comfortable with coming from an ITC perspective. Okay, I hope that helps to answer your question. All right. Okay, everyone.
Just
Huh?
as an just want to ask, are you perhaps available for consultation?
Yeah, so I mean, we have a consultation program for our existing Endonamo cohort for this year. I'm not entirely sure at this point whether or not we've extended that to the workshop candidates. So that's something that if you can just please reach out to the support team in that APC workshop group, and they'll gladly assist. But yeah, but for APC candidates, yeah, most definitely.
Okay, thanks.
APC, sorry, APC candidates. Awesome, everyone. Yeah.
Just a quick question. Not so sure if it's going to be quick to answer, but I just wanted to find out from you that if you look at the questions we've looked at, there were quite a few technical aspects that were being questioned and were required to be competent. How would you have gone through your pre-release period to make sure that you have covered all these technical aspects during the pre-release?
Yeah, so and Yasha, I'm not sure whether you have already, but give that screencast a watch, because I go, and that's a very important question, right? And it's one that I definitely cannot answer very quickly. But in that screencast, I try my best to go through in painstaking detail in terms of just the work that you need to do to put yourself in a place where you understand the basics of the trigger. And I say basic, I don't mean the easy stuff. I mean the fundamentals of a particular standard of a trigger. And then you sort of come through ready on the day to perform the analysis. Okay, so please just give that video a watch. Yeah, unfortunately, it's a question that I can't answer very quickly.
Okay. Right. So is that available to the workshop?
Yes, definitely. It should be on my universe already, and it's not already on YouTube, even if I'm not mistaken. But that video is definitely available to you.
Oh, okay.
Yeah.
Thank you.
Cool, no problem. Thanks, Nyasha. All right, peeps. Really enjoyed the session this evening. I mean, I hope you noticed how much I love talking about accounting. Thank you so much for engaging with me. I really enjoyed it, and you guys are fantastic this evening. Really enjoyed it. Okay. Have a good one. And if we don't chat again in a consultation or something, all the best for the exam. Wishing you nothing but success. Nyasha, hand. Okay.
Sorry,
No.
that was from before.
Okay, no stress, no stress. All right, have a good evening, everyone. And yes, all the best, and keep safe, keep well. Bye.
Thank you. Bye.